Getting into property investment may seem daunting, especially when you're thinking about funding your first buy-to-let property. The truth is, you don't need a huge lump sum of cash to get started. In fact, there are several ways to fund your first buy-to-let, from traditional methods like mortgages to more creative solutions like lease options. In this video, we'll explore 5 easy ways to fund your first buy-to-let investment property in the UK, giving you the tools you need to get your first deal off the ground. Traditional mortgage. The most well-known method of funding a buy-to-let property is through a traditional mortgage. This option is perfect if you've got some savings behind you, but it's worth noting that it can restrict you from expanding your portfolio quicker, as you'd be tying up a lump sum of cash into a single property. Typically, a buy-to-let mortgage will require a 25% deposit, though this can slightly vary depending on the lender and the property. Unlike residential mortgages, lenders will assess the potential rental income the property will generate rather than just your personal income. This means that your property's rental income should ideally cover the mortgage payments, and the property should be in an area with strong rental demand. The biggest advantage of this option is that it's tried and tested. Once you've saved up your deposit and found a suitable property, a buy-to-let mortgage allows you to leverage a relatively small deposit to acquire a larger asset and start earning rental income almost instantly. Lease options. If you want to acquire a property but don't have the cash for a hefty deposit, consider lease options. This is a creative strategy that allows you to control the property without having to buy it up front. A lease option agreement gives you the right, but not the obligation, to buy a property at an agreed price within a specified time frame, usually 1 to 5 years. During this period, you lease the property and you have the option to purchase it at a later date, if you so wish, for a price that's been pre-negotiated. Lease options are ideal if you want to lock in a property and start generating rental income without needing a large deposit. The initial cost is usually just a small upfront option fee, which can be as little as £1, and solicitors' fees. The main benefit of a lease option is that they provide flexibility, allowing you to test the property before fully committing to purchase. This strategy is particularly useful for people with limited capital or those wanting to take advantage of future market growth. Bridging finance is another great option, especially if you want to act quickly and secure a property before finalising a long-term mortgage. It's a short-term loan typically used for purchases that need to be completed fast, such as distressed properties or opportunities where you plan to renovate or flip. With bridging finance, you can borrow the funds for a short period, which is usually 6 to 12 months, while you either refinance into a traditional buy-to-let mortgage or sell the property. While the interest rates are higher than standard mortgages, bridging loans can give you the flexibility to move quickly and secure below market value properties. Then refinance once you've added value through renovations. As with any short-term finance option, it's crucial to have a solid exit plan in place to ensure you can repay the loan in time. By the way, if you'd like to know more about creative funding and ways that you can borrow up to 100% towards the purchase price of your first investment property, I've put together a free training course in the link below. If you're short on capital or experience, joint ventures or JVs can help you get your first buy-to-let property. A joint venture allows you to team up with another investor who has the capital or experience you lack. You combine your resources and share both the risk and the reward. For example, you might provide the property sourcing, the management and renovation skills, while your JV partner funds the purchase. JVs are an excellent way to learn from more experienced investors and gain access to better funding. Plus, they offer the advantage of shared responsibility, which can make your first investment less overwhelming. The key to a successful JV is setting clear terms and expectations up front. Whether it's sharing profits or deciding who will manage the property, make sure the arrangement is formalised in a legal agreement to avoid confusion or disputes down the line. The final option to consider is using other people's money, or OPM. This can be a game changer for property investors who want to scale quickly but don't have the capital themselves. OPM involves borrowing money from private investors such as friends, family, or other property investors to fund your property deals. These investors supply the funds in exchange for an agreed upon return, either as a percentage of the profits or a fixed interest rate. The key benefit of OPM is that you can secure the funds needed to get started without using your own savings. However, it's essential to approach this with care. Be transparent with your investors about the potential risks and rewards, and always have a formal agreement in place outlining the terms of repayment or profit sharing. Funding your first buy-to-let property doesn't have to be complicated. Whether you use traditional mortgages, get creative with lease options, partner with a JV partner, use bridging finance, or leverage other people's money, there's a funding option for every investor. Each of these strategies has its own advantage and considerations, but with the right research and planning, you can find the method that works best for you. The most important step is to take action. Don't let the funding process hold you back from getting started. With a solid strategy and some persistence, you can secure your first buy-to-let property and begin your path to wealth. Thanks for watching this video and stay until the end. And as I mentioned, I've put together a free property investing training course where I show you how you can borrow up to 100% of the purchase price on your first investment property. The link is below in the description. And as always, thanks for watching. I appreciate you for being a subscriber, and I'll see you on the next one.